Hello and welcome to BQ Prime. Joining us today is Mr. Nitin Rakesh, Mphasis CEO, and Mr. Manish Dugar, Mphasis CFO, after the company's quarterly earnings. Mphasis in the first quarter reported revenue that was down 3% sequentially, and the net profit was also down 2% sequentially. Gentlemen, welcome to BQ Prime.
Thank you.
Thanks for having us.
Coming to you, Mr. Rakesh, first, what are your key takeaways from these results at this moment?
I think it's fair to say that the short-term revenue environment's been fairly headwinded and a little bit more acute for us given our large exposure to banking segment, and especially the mortgage side has been declining for almost 4 quarters now. Also, I think this was kind of the crescendo quarter for all the regional banking crisis that started late in calendar Q1, and in a way kind of started to get resolved through the remainder of the first half of the year. So I think all of that impact is showing up in quarter in the Q1 numbers. Good thing to note though is that our deal wins have been very strong. More importantly, we've started to see unlocking of the decision-making cycle that was kind of frozen for the past couple of quarters. Mm-hmm. Conversion from pipeline to TCV and TCV to revenue, while still not ideal, started to improve as well. We do believe that there are early signs of uptick on the mortgage side. We've started to see volume uptick over the last few weeks. Mm-hmm. And more importantly, we've also started to get client requests around capacity buildup in anticipation for improvement in that through the remainder of the year. So I think it's fair to say that Q1 was a base formation, a bottoming out quarter, and we expect growth to pick up through the remainder of FY24.
You actually preempted my next question to you. My question was whether do you see this is at the bottom? The other thing what I wanted to say, what is interesting that you're pointing out is that you are seeing some client interest in ramping up deals. This is actually opposite to what we are hearing from some of your larger peers, especially when Mphasis also said the same thing yesterday, and others also said that this picture of the delays in decision making has been pushed to about the second half. Why do you think your case is different than as compared to the larger peers?
Yeah, I think at a very high level, what we are saying is not that different. We're saying that it has been difficult for the last couple of quarters. I think they probably, saw it maybe, at a different time in their cycle of the business. More importantly, I think our exposure was a lot more to the distressed segments around banking, especially regional banks and mortgages. So I think we've already seen the brunt of that. And some of that, what you're seeing with the names you talked about is probably a continuing effect of what we've already been seeing in the last couple of quarters. More importantly, I think where we've seen green shoots of activity is in the decision making around taking decisions around awarding contracts. Mm-hmm. What we want to see improve further is that conversion of those closed deals to revenue. That has been a sore spot across the industry. We've also seen that. We've seen some uptick in that. Green shoots are visible, as I mentioned, but I think a long way to go before we can say that we've normalized where conversion is picked up. And I think the shorter duration organic growth deals, those have to come back as well, because those are typically linked to discretionary spends. And the trickling of those deals is something that still has to revert back to normal.
Okay, Mr. Dugar, I would like to bring in to you at this point of the conversation, especially when we want to talk numbers. How is the deal making looking like in terms of numbers, in the terms of total contract value, as well as the number of deals that you have right now? Secondly, we see that your BFSI is down around 9% quarter on quarter, and the logistics and the TMT vertical is also not looking good. How does that impact your margins? And again, like what Mr. Rakesh said, revenue is not coming in as much as you would like. So how do you maintain margins also in this case, sir?
Can you hear me?
Yeah, I can hear you, sir. Please go ahead.
So, coming to the TCV and the pipeline, we closed $707 million of TCV, which is a record quarter for us. And it is more than 100% growth, both YOY as well as quarter on quarter. More interestingly, the trend over the last so many quarters, we have been increasing the number of large deals. And it is very, good to see that not only did we close 7 large deals, 4 of them were more than $100 million. More importantly, within that contract closures, we also see diversification from a vertical perspective. A large percentage of the TCV contracts came from outside of the BFS vertical. We also saw AI investments that we made in the past starting to yield results with close to 1/3 of the TCV wins coming from AI deals, right? So all of this suggests that everything that we have been investing in has started yielding results. And like Nitin mentioned, if you were to think of 3 stages, origination, closure, and conversion, origination was happening, which was resulting in pipeline growth. Now it has started showing in conversion. And some of that converted deals have started impacting the revenues as well. So, we also saw some of those contracts that we closed actually translate into revenues in the same quarter. So from a stage perspective, I think we are progressing towards things coming back to normalcy, and hopefully it will soon, result in revenues as well. On your question relating to BFSI, mortgage is a large contributor to what you see in the BFS space. And within that, there has been a recent uncertainty in the banking sector, and that has had impact on discretionary spends across the banking community. So we believe that when we look at our clients and when we look at our conversations, we haven't lost any market share at any place. In fact, in most of our clients, we have gained share of wallet. What we see is a temporary phenomena. As that spend comes back, as the certainty comes back, we should see an uptake there as well. If you look at an overall level, with the closure of contracts and with the green shoots on conversion of those contracts into revenue, we believe that as we go forward, we should start seeing decent sequential growth in the second half of the year.
That's a very interesting take, sir. Just wanted your take on the margin front. You don't see the revenue coming in as much at this point of time. You're seeing green shoots of recovery. At what levels do you expect to maintain your margins, sir?
We have stated the philosophy of maintaining margin in a narrow band while investing for growth. We have guided that we will be in the range of 15.25% to 16.25% for the year. Mm-hmm. We started with 15.3, we did 15.4 this quarter. Given what we see today, with the revenue decline as well as with the challenges in the macro, we were still able to expand the margin in quarter one. As we look forward to growth coming back and tailwinds existing on both operating metric, our improvement in pyramid, our investments in what we have delivered from a value delivery perspective, leading to customers willing to give us price, we feel confident that we should be able to report expanded margins going forward as well. Despite planning to make investments, which we had been slowing down because of the uncertainties that we faced in the recent past. So at an overall level, we feel pretty good about where we are from a margin perspective.
Okay, coming to you, Mr. Rakesh, against that backdrop, how are your hiring plans for the year, given the evolving situation that is FY24?
I think we are fairly comfortable. We have done a lot of work in pyramid optimization, in building up supply chain engine, in doing manpower planning, in obviously reskilling those resources. We had a pretty large percentage of campus hires onboarded over the last 3 years. So I think utilization is fairly comfortable. We are not at peak. We are not at the bottom. We are right where we want to be. Mm-hmm. And that's the reason why I think there's a fair bit of confidence and comfort that we should be able to manage the profitability as growth recovers as well. So I think we will be definitely looking for opportunities to continue to upskill our talent, given just the massive investment that's going on across the enterprise space in things like AI and cloud. And that definitely gives us the operating leverage we need in the system today.
So you wouldn't like to quantify the amount of fresher hiring that you'll go for this year?
No, we typically don't quantify only because, things have been so dynamic. We'll definitely let you know once we get to that point. But at this point in time, I think we are being fairly, as I mentioned, nimble and agile around those plans.
So, Mr. Rakesh, how do you see your partnership with Core AI fitting in with your AI strategy going ahead, sir?
Absolutely delighted that we were able to partner with the world leader in conversational AI and Gen AI solutions. I think they have, they're a leader in the Gartner Magic Quadrant. Mm-hmm. They've been around for a very, very long time, investing in building up their platform that enables enterprises to deploy conversational AI solutions as well as Gen AI solutions embedded into areas like customer experience, content, IT, support transformation, and of course, any form of automation that you need to bring in dealing with inside or internal or external consumers. So I think very pertinent, very, very interesting customer base. Both the customers that we are engaged in delivering those platforms to, and as well as taking those solutions bundled into our services to our customers as well. So strategic partnership gives us a head start in actual live implementations, and that's the bedrock of a lot of what we've done in Q1 in terms of TCV as well.
Mr. Dugar, one final question to you, and then there'll be one last question to both of you. Mr. Dugar, how much do you see AI contributing to your top line in the near future, given these uncertain times? How much of the deal making is going to be driven by AI?
As we go forward, it's not unlikely that almost everything we do will be powered by cloud and cognitive, as we've been saying for the last 5 years already. Mm-hmm. Even if you look at things like application development, there is a significant embedment of Gen AI with large language models that is underway. If you look at modernization, extreme opportunity available to actually use large language models to actually reverse engineer code and accelerate the pace of application transformation. If you look at QA, absolute right for using AI solutions as well. So I think almost everything we are doing is getting powered by cloud and cognitive. Mm-hmm. We have been on the journey for 5 years, and now we're at a point where I think it's going to become almost omnipresent in almost every deal archetype and every solution that we are building.
All right. Final question to you, gentlemen. You mentioned about green shoots. You mentioned about some deal wins coming in right now. Would you say confidently that this is the pain that we are seeing, the slowdown that we are seeing is bottoming out? First, your views, Mr. Rakesh.
I think we've already, Tushar, called out for the fact that Q1 was a base formation and a bottoming out quarter, and we do believe that through the remainder of the year, sequential growth will pick up, even though it might be backloaded. Right? So I think that's kind of where we are based on current visibility. Obviously, we can't control the macro environment. If there is another macro event that we can't foresee today, things might change again. But given where we are, given the declines we've seen in the last few quarters in most cyclical parts of the business, at least that seems to be largely behind us. But at this point in time, I think it's fair to assume that we will see sequential growth pick up through the quarters for the remainder of the year.
All right. Thank you, gentlemen, for joining us today. It was a fairly insightful chat. The bit about green shoots is actually very refreshing to hear in this, gloomy scenario that we are seeing in Indian IT. Thank you, viewers, for joining in. This is Tushar for BQ Prime.